Hey everyone, this is McKeown back again with some advice today on real estate. The topic we're going to discuss today is 5 different ways to invest in real estate. So to give you some history, about 4.5 years ago is when I got into real estate. Actually picked up Rich Dad Poor Dad, kind of changed my overall perspective on my finances and really intrigued me to get invested into real estate. The first one we're going to go over today is the one that I believe most people are aware of, and that would be flips. If you grew up within probably the last 10 to 20 years watching HGTV, you've probably seen some kind of TV show where they're flipping houses. Now, it's not always easy as it seems on those TV shows. Unfortunately, a lot of people make a lot of money, but also a lot of people lose money. But flipping is a great opportunity for individuals to get into real estate and to get a pretty quick return if things go the right way. Flipping is not my preferred method of investing. There's a lot of risk. Obviously, there's a lot of reward as well, but the risk for me just doesn't outweigh the reward. So I have a couple other preferred methods of investing that I will get into. Flipping is very saturated in a lot of different markets, meaning people are aware of it, people are trying to do it, and it just makes it very difficult to profit in some, I would say probably a lot of different metroplexes in different areas because of how many individuals are out there trying to flip properties. The second way to invest in real estate is going to be short-term rentals. Short-term rentals are going to be properties that really are destinational or in certain areas where there's a high traffic amount of tourists. So, you know, your Hawaii's, your Orlando, Florida's, your mountainous areas, or the areas that a lot of people are going to be traveling to for vacations. Short-term rentals could be a good opportunity for a good return on your investment. It's great to be able to use as a place for you to go to and not have to pay for any kind of housing. But also in the meantime, that can also be rented out, whether it be in VRBO or Airbnb. These are different applications that will rent out your condo or your house to other individuals that are coming for a short amount of time. For instance, a weekend or a full week or maybe even a month. But this is not, a short-term rental is not someone that comes in and is looking for a place to stay for a year. There's pros and cons to every single type of investing in real estate. For instance, the flips, as I mentioned before, high risk, high reward. This is going to be a little less risky, but still you're inheriting some risk with the current situation that we're in our world right now. Short-term rentals are actually doing very poorly because there's not a lot of travel going on. Another thing about short-term rentals is you're obviously going to have a higher turnover. You're going to have someone come for a weekend and then likely need to clean after the weekend for the next individual, family, or whatnot to come the next week. So there's a little bit higher turnover, likely more vacancy, but you should get a significantly higher return on a daily rate than if you had a long-term tenant in there. The third way to invest in real estate is going to be my favorite, and that's long-term rentals. Long-term rentals is really where I started out with investing in real estate and where a majority of my portfolio is going to be held probably for the foreseeable future. I currently own a duplex and a quad, both with my VA loan. If you have not checked out my previous video leveraging my VA loan, please check that out. It has a tremendous amount of information in it. As of right now, all of my portfolio is long-term rentals. It's really the avenue that I want to continue to pursue. However, my personal residence that I'm building will have a private Airbnb suite, so that's a little bit more short-term rental. There are risks, obviously, with every type of investing in real estate. In my personal opinion, long-term rentals are going to have the lowest risk. Now, with that being said, obviously you can inherit tenants that you have to evict. You can inherit tenants that absolutely destroy your property. But I've had a good time and a fortunate opportunity to really put tenants in my properties that have done a tremendous job of obviously paying rent on time and making sure that my property is taken care of like their own home. So when it comes to long-term rentals, it's either putting 20% down on a single family or putting 25% down on a multifamily, or you can accumulate properties by occupying them. So for instance, me, I occupied a single family, a duplex, and a fourplex, and I've since moved them all into investment rental properties. Now, the long-term play with long-term rentals is obviously to hold these for a very long time, continue to cash flow every single month and pay off the current debt that I have with these mortgages and really own these properties outright. Or down the road, if I build up enough equity in these properties, I can refinance out that equity and apply it to future investments. Long-term rentals, again, are my favorite investment. They're a low-risk investment when you think of other opportunities in real estate. And for me, it's a very easy entry into real estate without having to risk too much of your finances. The fourth way to invest in real estate is going to be syndications. Now, this is probably something that not everyone has heard of. To give you an idea of what a syndication is it's really a group of investors that are pooling their funds together to purchase oftentimes a larger investment. So to give you an example, I'm invested in a large apartment complex in Florida, and I'm also invested in another syndication in Austin, Texas, even though I live in Dallas. The point of this is that you yourself are not out there investing tens of thousands, if not hundreds of thousands, or even millions of dollars into one particular investment. It allows you to pool your funds together with a group of investors, and really you can invest as little or as much as you want. So to break it down, basically if you go invest $10,000, obviously in a syndication, it's going to vary your return on the syndication that you so elect to choose. But in the particular syndications that I'm invested in, I'm investing a small amount of cash and hoping in about 3 to 5 years, I'm doubling my return. Now, obviously, again, returns are going to vary depending on where the actual investment is and the length of term, but it's truly 100% passive. And the last way to invest in real estate would be wholesaling or using private money. Now, these are two separate things, but to give you an insight on wholesaling is going to be a lot of grunt work. It's going to be a lot of hard work. It's going to be a lot of sourcing deals on your own. So to give you an example of wholesaling, it would be like me finding an individual owner of a property who needs to sell the property. Well, I don't have the funds to buy the property, so what I will do is I will be a middleman between the owner and the final buyer. There are a lot of folks out there that are able to help sellers that are in tough situations. For instance, if a house cannot be financed, if it can't go conventional, if it can't go FHA, and the only way that this house could be sold given its condition is cash, and that seller just doesn't have the connections or doesn't know anyone that has the cash to purchase this, well, that wholesaler will come in, analyze the property, make sure that there's enough cushion for an individual to profit at the end, but also make sure that that wholesaler has a little bit of cushion in between to profit as well. This obviously happens on a daily basis. There are people out there that need to sell their house and are in dire situations. And in this case, if you decided to wholesale, you could oftentimes help people, but it is a gray area of real estate where, you know, your ethics can really come into play. You can take advantage of sellers, and it's just a really, really rough place to be if you're not doing it right. And continuing on with private money, that's essentially you becoming a bank or you becoming a lender and lending funds to an individual that's looking to invest in real estate. Now, the plus side to that is those are oftentimes very short terms, whether it be a week, a month, a couple months, 6 months, maybe a year, and you can get a very good return on it for a short amount of time. Private money is going to be more or less an investment for someone that has a lot of active capital and doesn't exactly know what to do with that capital. It'd be a good place to start if you're wanting to loan money out to other individuals and getting a quick and easy return. So those are 5 different ways to invest in real estate, really 6. Now, are those the only ways to invest in real estate? Absolutely not. The beauty of real estate is there's really so many different ways that you can invest in real estate. I would say those probably are going to be the most prevalent, flipping being number 1. And for me, long-term rentals being the avenue for retirement and long-term wealth for myself. If you're curious about anything that I've mentioned or want some more details about any way to invest in real estate, just comment down below and make sure to subscribe.